Hello, everybody, and welcome to another Accounting Odyssey. So we're dealing here with exercise 13.3. This is my second take at this video. So I would approach this differently on a practical basis than the way your book is doing it, but actually the way your book is doing it makes it a little bit easier. So let's go through and take a look at this particular question. So it employs non-individuals who work 8-hour days and are paid hourly. The vacation days are earned in the current year and can be used in the following year. The 6 paid sick days are done annually. Vacation days may be taken after January 15th of the following year that they're earned. So let's go through here and first say to ourselves is like, okay, for 2019, what do we need to accrue for here? So for vacation, okay, the days of vacation are going to be 10. For the sick days, they're going to be getting 6 sick days, okay? So hours per day, 8 hours in a day. My rate per hour, and this is going to be at 10 and 10. So the total, the number of employees, they're 9 employees. So the total amount of the accrual is going to be the days times the hours per day times the rate per hour times the employees, or giving you the accrual. So here, this is going to be 7,200 for vacation days, and this is going to be 4,320 for sick days. So let's go through and do the journal entries for these first. So I get 12/31/19, salaries and wages expense. This is going to be 7,200. Salaries and wages payable. Over here, okay, and it's really important that when we're doing this, we want to make sure that we're keeping track of these separately. So we're going to have over here so I'm going to have my vacation, and then I'm going to have sick days. Okay, so 12/31/19. And I may also want to be going through and doing these accruals throughout, because if it's significant, this is something I would want to be going through and accruing for, just because I don't want a year-end surprise. So I might do this monthly. Okay. So my salaries and wages payable for the vacation days was 7,200. For the sick days, it was 4,320. Okay. Now, in terms of the sick days, they used 4 sick days in 2019. So I need to go through and to record these as well. So I used 4 sick days, 8 hours per day, $10 per hour for 9 employees. So my sick used is going to be 2,880. I'm going to put this down here separately. My vacation used in 2019 is not applicable because they can't use those days in that particular year. So that one here is going to be not applicable. So over here at 12/31/19, I'm crediting cash for $2,880, and I'm debiting salaries and wages payable sick days for $4,320. Okay. And so to make this a little bit more official, so my beginning balance for both of these was 0 because they started business in 2019. We added 7,200 to the vacation day accrual. We added 4,320 to the sick day accrual. We paid them out 2,880. So my ending balance over here for the sick days is going to be 1,440. And the ending balance on my vacation days is going to be 7,200. So in terms of a footnote disclosure, what you could be doing, and I think what your book goes through and does is they'll show over here January 1st balance, 0. Earned is going to be 7,200 for the vacation, 4,320 for the sick days. Used, it's going to be 0. And this here is going to be 2,880. So my ending balance is going to be beginning plus what was earned less what was used is going to give you your ending balance. Here, this is going to be beginning plus what was earned minus what was used is going to give you your ending balance. And if you want to make sure that you did this right, the accrual for the sick days is I had 6, I used 4, so I should have 2 left. And if I just go through here and check it, that's how I know I've done that properly. One of the other things I'm also going to suggest to you is that when you're working as an officer of a company, especially in the area of human resources, I want to make sure that you understand human resources is extremely complicated. And if you don't go through and really hire somebody that knows what they're doing, it can be an absolute nightmare. Okay, so that's where we get for 2019. Now let's go through and take a look at 2020. When we look at 2020, the ending balances are going to basically come down over here. So for 2020, this is, we'll call this for 2019, 2020 or 2019. So when I'm looking over here at my salaries and wages paid for vacation, my 12/31/19 balance becomes my 1/1/20 balance. Okay. So what we're going to do first is we're going to go ahead and add in the accruals for the current year. So that'll give us a pretty good start in terms of what to go through and do. Okay, so those are the journal entries for 12/31/19. Let's go through and do the ones for 12/31/20. So for vacation, okay. For vacation, my vacation accrual, and for my sick accrual, 10 days, 6, 8 hours, 8 hours in a day. My rate per hour, though, now is different. So my wage went up by 10%. And so I have to note that as I'm going through and doing these accruals. So over here, in terms of the journal entry formats are not going through and changing for the actual accruals as of 2020, or excuse me, during 2020. Okay, so over here, I'm recording salaries and wages expense, salaries and wages payable for vacation, and then over here at 4752. So that's how I go through, and over here, I'm adding in 7920, and over here, I'm adding in 4752. Okay, so, but now we get the fun part, is that we're using days. So we've got vacation used and we have sick used. Let's go through and do the vacation used first. In 2020, they used 9 of their vacation days. So 9 days, 8 hours in a day. Now what's kind of critical here is that they're not going to get paid at their old rate. They're going to get paid at their current rate, which is going to be at 11. Okay, so, and we may want to make a further delineation here. So they're basically the rate per hour is 11, the employees is 9. So my payment in terms of cash is going to be 71.28. So over here, I'm going to have the cash payment for these employees is going to be 7,128. Okay, that's the amount of cash I have to pay them. All right, and I did this one a little bit correctly. Okay, so that's the cash paid. And again, this is going to be different than the reduction of the accrual. And the reason is for this reduction of the accrual is that these days that they took really related to this activity here in 2019. So when I go through and I do the reduction of the accrual because they're now using some of these vacation days, what I'm going to go through here and say is like, okay, there's a couple different ways I could do this. But if I do it, so over here, this will be at 6480. Now, if you think about this, if I look at this, this is the total amount of my accrual from last year was 7,200 divided by 10 days, right? This is going to be my accrual per day for vacation. So the amount of the accrual that I'm going to relieve this by is going to be at 6480. So here, that's where I'm kind of getting that number because I'm using 9. That's where this is coming from at 720 a day at 9 days under the old rate. So over here, this is going to be at 6480. So I'm debiting salaries and wages payable vacation over here for 6480. But I have a problem. What is my problem? Well, my problem is my total debits don't equal my total credits. So over here, I need to make another adjustment here for 648. And what this really represents is that this is 9 days at like $1 per hour at 8 hours per day. And what that really represents is this is going to be salaries and wages expense. Okay, so this is going to be record vacation days used in 2020. So notice here, the cash is going to be based on the current rate of pay. When I relieve the accrual, I need to do it at the rate of pay that was actually in place during the prior period. So at the end of the day, my ending balance of my accrual is going to be 8,640. Where is this number coming from? Well, it's the current year accrual plus the 1 day that has not been used yet from last year, or a total of 8640. So for my January 1st balance here, 7,200, they earned 7920, they used 6480. So my ending balance here is going to be 8,640. Okay. Now, with the salaries and wages for the sick pay, we have the initial amount plus the sick accrual for the year. Now, in terms of what was actually used during 2020, is they used 5 days. Now, when I'm going through and looking at this, I'm kind of going, how do I go through and do this? Do I take a blended average, or what should I do? The answer is I would relieve the liability, the earliest liability first. So over here, you're going to have salaries and wages payable, sick days. Okay, this is going to be, oh, actually, let's do the easy part first. I'm getting ahead of myself. The amount of cash that's going to be paid out in 2020, okay, is going to be over here. So let's go over here. So 2020 sick paid. So the amount that's going to be paid over here for the sick days in 2020 is they used 5 days. Hours per day is 8. Rate per hour is now 11. This is for 9 employees. So my payment is going to be the sum, or the multiplication of all these amounts here. So that's how I'm getting that value. So that's going to be the cash that I'm paying out, because when I pay out for the sick days, I'm paying at the current rate. So I'm paying out $39.60 for the cash. Now, in terms of where is the liability that or what are the liabilities, or what do I need to go through and relieve here? So the first thing I would do is that this is really for 5 days. Okay, so I would relieve this by saying, what was in my accrual previously? Well, in my accrual previously, I had 2 days left. So I'm going to go ahead and debit this for $1,440. Then for my 2020, my sick accrual used, this is going to be for 3 days. Okay, and let's break this up. Call this sick accrual used. So these, I had 2 days from last year. I'm going to use 3 days from the current year. Okay, 8 hours per day on each of these, but this had a rate of $10 per hour, and this had a rate of $11 per hour. So when I'm coming over here, I'm getting $14.40, which is the amount of my prior accrual. And then here I have $23.76. So this is going to be salaries and wages pay sick. This is going to be $23.76. Okay. Now, what's going to happen here is that my numbers are not going to balance. This difference, so of 144, is going to be over here for the salaries and wages expense. And this is going to be as of 12/31/20. And why is there a difference here? It's because when we pay out the sick days, these are being paid at the current rates. My liabilities were set for the older rates, so that's why I have a difference over here. So the other thing that's impacting my sick days is, so I did this over here. I did it in 2 steps. I have 1440. I have 2376. So in terms of my ending sick balance, right, of 2376, what should that really be? Well, my sick accrual here was for the current year was 6. I wiped out what was there for 2019. So my sick remaining as of 2020 is going to be 3 days. Or 2376, or this balance right here. So these 3 days should be at the most current rates. You wouldn't want to do something like LIFO, meaning that you're taking out the most, you basically would expense everything through here first. You would want to be using the oldest day first, so your liability is more current. So here, my beginning balance was 1440. They earned 4752. They used 1440 minus 2376. So my ending balance and my sick days is going to be 2376. I realize that this is a lot of work to kind of go through and to do a question like this, but this is how you need to make sure that you've done this correctly. So just give me a moment. Okay, so assume the same facts in exercise 13-3, except that Broderick Company has chosen not to accrue paid sick leave until used, and has chosen to accrue vacation time at expected future rates of pay without discounting. The company used the following projected rates to accrue for vacation time. So prepare journal entries to record transactions related to compensated absences during 2019 and 2020. And then compute the amounts of any liability for compensated absences that should be reported on the balance sheet as of December 2019 and 2020. So if we come back over here to going back over here and looking at this, so the actual amount in terms of wages paid for sick days, the way that your book is going through and doing this one here is to record the amount for paid sick leave. They're simply just going over here and taking this amount. That's all they're going through and doing. And I'm not going to go through and comment on that. I think what you would just do is that if it's just if you pay it as you use it, you might be reclassifying out as sick time used. So, but in any event, let's go a little more to the vacation accrual. Okay, so going back over here to the vacation accrual is that we have vacation days in 2019. So my vacation days in 2019 are going to be 10 hours per day, is going to be at 8. Rate per hour is now going to be at 1075. And then my employee number is now going to be at 9. So when I multiply this through terms of my accrual at 2019, it's going to be 7,740. So instead of using the current year wages to go through and to do this, so 12/31/19, my salaries and wages expense is going to be 7,740 to accrue for vacation days. Okay, so let's just take a look at our T account. So my salaries and wages payable for vacation on 1/1/19, because this is the first year of operations, it had a 0 balance. During the year, I'm accruing for 7,740. So my ending balance is right here at 12/30, my accrual. So at 12/31/19, that's going to be my balance. When we get to 2020, okay, so when I get to 2020, I would do the same thing. I'm going to go through and accrue over here at the new rate. So my accrual for 2020 I'm now accruing at a rate of $11.60 per hour. So my new accrual is going to be $83.52. Okay. Okay. Now, in terms of so the only thing that's really going to be changing here is that I went through and I actually used going through and doing the actual vacation days. So in terms of the vacation days, I'm paying at the current rates. So the amount of cash that I'm paying, and just remember that the employees used 9 vacation days during 2020. So over here, the amount of cash that I'm paying is going to be this will be 9 out 9. The actual rate of pay is 11. So the amount of cash that pays out is going to be the same as what we had earlier, meaning that this 71.28, that's where that number is coming from. So the amount of cash I am going through here and paying out is going to be 71.28, which is this balance right over here. Okay, so that's the amount of cash that I'm going through and I'm paying out. Now, what I have to go through and do is I have to relieve my accrual. So I used 9 days. This came from 2019 because obviously we can't use any days from 2020. So over here, the relief of my accrual from 2019 is basically going to be 7740 times 9/10 or 69.66. And where did I get this number from? Well, they used 9 days in the 2020 year, which had to have come from the accrual from 2019 because you can only use vacation after you've earned it. So what I would do here is I would take the vacation days so this will be 10 vacation days. My hours per day is I use 9. My hours per day is 8. The rate per hour that I accrued this at is at 10.75. So my employees are at 9. So my accrual relief is going to be 69.66. Now, what you'll notice is that my wages don't balance. Why doesn't it balance? Because I was wrong in how much I was going to be paying my employees by 25 cents. But as we see over here, you've got this difference. So this would be salaries and wages expense. And this would be on 12/31/20. So over here, in terms of what this looks like, is that I've got 69.66. So my ending balance is going to be 91.26. Where does this come from? It's 83.52, which is my current year accrual, and then I have 1 day left, or 77.40 times 1/10, or 91.26. In terms of the sick days paid, what they're probably going to tell us to do is just to go through and to take the actual amount, kind of what we did over here. I think your book solution shows that it would just be, you would just be going salaries and wages payable basically for the sick days. It would be $11 an hour times 5 hours, 5 days times 8 times 9. And that would be your basically over here for exercise 13-4. Okay, so the liability for compensated absences as of December 31st, 2019 is going to be $77.40 and then $91.26 for 2020. Sick doesn't have it because you're not accruing it. Okay, is there an issue with that? The answer is really, it depends. I think you're better off accruing for sick days. It just depends on what your company policy is. And as always, do not do HR stuff on your own. Make sure you consult with a professional. It is extremely complicated. You have no idea how complicated human resources is. Very, very difficult. So in any event, I want to thank you for joining me here today, and I look forward to seeing you on the next video. Have a great one.